Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for Thursday, September 11th, 2025. Certainly a solemn date that shall always remain in our hearts and our minds. Uh, Markets really rallying here. I think the Hindenburg omens and a lot of the negative sentiment about September have to be considered left behind, although we still got 10 days left. But CPI, PPI, and jobless claims certainly point to Fed easing. Market rallies to new highs. Is there anything that can stop this freight train? I think there is, and I think that is a recession. And I think that is now going to be what we're going to be watching for. Um, do we slow down too much? Did the Fed miss the boat by not cutting yet? Do they need to do a 50 basis point cut for September? If they do 50 basis points, will that spook the market that maybe they missed something? Markets don't go up forever. This is certainly a incredible run. I'm hoping you're participating. Those that watch me and listen to me, if you listen carefully, what have I been saying? I've been cautious. I actually have had puts off and on some of my positions, but I've still been long because my timing model has set to be long. I just get nervous when I start to see the intrinsic value of a call option start to have 30, 40, or $50 in it, because then I start to carry the same risk as owning the stock. So I think this is a great market. It's been a fantastic year. Um, Maybe I'll do another thing before the end of the year and show how I finish the year. But those that watch me regularly know that I've had a good year, and I hope you have had one as well. So, question is, where do we go from here? Again, my name is Jeffrey Scott, marketmripro@gmail.com, and Google Group Top Down Trader. This is for educational purposes only. Anything I talk about should be taken in setting of education and not investment advice. The intent of the video is to apply and demonstrate the tools of top-down analysis. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned. Trading stocks and options should be considered risky. You should always consult with your financial advisor. And I've got tools of multiple platforms. I signed off today on the MetaStock tool. It may not be for everybody. If you already have my app, there's not a whole lot of functionality there. The biggest difference is if you want to look at things besides U.S. equities, because you can get real-time data feeds with futures, various Bitcoin derivatives. But if you like trading Indian stocks or European stocks, that's the beauty of MetaStock. The other advantage is it'll now give us a second vehicle besides TradeStation to marry the strength of what I do with what Sager does. So very excited there. More to follow about that coming up. If you want to stay in touch, join my Google group. It's called Top Down Trader. You sign into Google Groups, you go to all groups, you look for Top Down Trader, you let us know how you want to how often and how you want to be contacted, and then you're part of the team. I will be moving this to Discord. I'm just trying to decide when, and I'm also looking at some of the other entities out there. I am not going to have a trading room. I am not going to be there all day telling you how to trade, because that's not how I trade. But I do think having a vehicle for conversation outside of email makes a lot of sense. Also, just a great way to share indicators and other things that I might want to share with the group and others might have. Now, trading is much more than stock picking. In fact, I would argue that if you're really good at trading, really good, or investing, or whatever it is you do, and really good probably means you have a 50-50 rate of picking good stocks, but you have a really strong rate of good money management. And then learning how to, is it options, is it straight stocks, but learning how to trade. When do you take when do you do the buy? Do you take profits along the way? How do you set your stop? How do you manage that stop? That's where the money is made, not on stock picking. We're going to stock pick tonight. We're going to look at the market. But what I do at my live meeting is I spend more time about how you do this. All right. The what, and we do this pretty good. When, I think we do that pretty good. But it's the why we do pretty good here. But the how and the where, or which spread. That's what we spend 2 days talking about. So it's October 26th and 27th. It's the Marriott Palm Beach Gardens, 2 packed days of education and software instruction. For those that are really interested in learning, John Person has his meeting the 2 days prior to mine. I'll probably come to John's on the 25th. I'm speaking at another medical meeting on the 24th. Separate fees, but one airfare. I charge $12.50. That includes breakfast and lunch on Sunday and Monday, a dinner cruise on my yacht on Sunday night, weather permitting, with catered dinner. The hotel's $155 a night. You just Uber there from the airport. It's 15 minutes, 20 minutes from the airport. If you have a car, there's a lot of shopping, and there's a lot of restaurants within a mile or two. For more information, reach me at marketmripro@gmail.com. And for anybody that attends that meeting, they will get a discount, a rebate of up to $400 on their next purchase. Now, that would include the Market MRI Pro app. It would include the TradeStation tool set. I'll see what I can do on the meta stock. I don't know yet. Or it could be a rebate on my, not the Orange County, but on my education session if I elect to do, well, not if, when I elect to do one in 26. Know your news and earnings, and I've been talking way too long. I apologize for that. We've gotten through the meat of it. Consumer sentiment, if it comes in lower than anticipated, it could sink the market because will the consumer keep buying? They're certainly keeping up this economy. On the earnings front, Adobe was up a bit. If I remember correctly, Restoration Hardware was down a bit. Other than that, not too much excitement on earnings after hours. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. For more information about the live meeting, anything I talk about, the software features, just reach out to me. I don't bite. marketmripro@gmail.com. If you own the program and you have questions, if you have concerns, if it's not working right for you, Praveen at coding@marketmripro.com can help you out. And join the top-down trader group because that's where we exchange a lot of ideas. Let's go on to the charts. Now, one last thing, if you're new to my channel, hit the subscribe, hit the alarm. That way you'll get notified when I post these. If you like what I'm doing, hit the thumbs up. If I suck, hit the thumbs down. If you got constructive criticism, positive or negative, put it in the remarks or email me. I always like to learn how to be better. I appreciate you coming to these things because as long as people watch, I'm going to keep doing them. And I am convinced I'm having such a great year because I'm forced to look at the market this critically on a daily basis instead of what I've historically done is do these on the weekends. It might just be coincidence, but this is probably since 2020 when, many people were up a couple 100% in 2020. This is probably my best year since then, and I do think it's because of how often I'm doing these videos and being forced to follow my own rules. If we look at the daily performance, the Russell was the highest, up 1.85, finishing just off the high of the session. Just a super, super strong day for small caps. Diamonds 1.3, Spiders 0.83, and the NASDAQ, the smallest of them all, up 0.58. So you had big breadth increase with the Russell and the especially leading. You can see Bitcoin was up 0.77, dollar was down again. And if the Europeans are holding and we're cutting, that probably means our dollar drops, and in dollar denominations, gold probably goes higher. And volatility was down 2.21%. On the new highs versus new lows, the new highs minus new lows, you could see triple digits positive at 52 weeks in both the NYSE and the NASDAQ. Pretty significant improvement. If we look at participation, all the sectors of the S&P 1500 up and 96% of the industry groups were up on the day. 82 and 84 on the NASDAQ and 92 and 91 on the NYSE. 88% of the stocks were up on the S&P 1500, 71% on the NASDAQ, 81 on the NYSE. That's an overwhelmingly positive day. Now, folks know I like to look at market surge for my volume. You can see NASDAQ volume is a little bit higher than average. NYSE is kind of average. So a little bit of volume, but boy, what a rally. And we did see new highs on multiple indices, as I will show you. If we look at what worked, interestingly, technology lagged on the day. And let's just one day change. You could see everything was up in the S&P 500 sectors. Materials, discretionary, healthcare leading. Whoops, over here. And the laggards were energy, tech, utilities, and staples. So except for tech, sort of the defensive plays were lagging. And if we look at themes, leisure and entertainment, lithium, home construction, rates down, silver, data centers, China internet, Dr. Copper, autonomous driving, cloud computing, retail, consumer discretionary, biotech, cybersecurity, biotech. Boy, those are the rah-rah high growth stock names and sectors and industry groups and themes that I really like. So it was another good day. What a week we've been. I mean, I just keep waiting for the market to pop the balloon. It's been an incredible market. The timing, the weekly, you can see the new highs formed for the week, closing today at all-time highs on the spider, all-time highs this week on the Qs. I didn't put a line in, but all-time highs this week on the diamonds. Not yet all-time highs until we get up here on the Russell, but boy, it's had as big of a return as any of the others. Flipping to the dailies, you'll see that if we just look down here, the dailies are in a buy in all time frames, the weekly are a buy in all time frames, and the monthly are a buy in all time frames. I have to say, you got to be long here. Now, do you have to be all in? That's up to you. I've used up a lot of my cash this week. I still have some puts that I've taken off. I still think there's some risk, but I am getting more and more long leaning every day. And yes, I probably am being a little bit more defensive than I need to be because I really want to show a pretty super return when I do my end of year review. And it's pretty super right now. And I'm not telling you numbers, so SEC don't get mad at me, but I'm trying to protect my gains. And maybe that's the wrong thing to be doing, but that's what I'm doing. If we look at the US indexes, we could see the spider all-time highs up on the session 0.83, closing just off the highs. Now, if we push it over here, we're not out of the negative seasonality time yet. That's one thing to be aware of. The Qs up 0.58. The close is 584.08. Here, the high was 583.32. So a new closing high and a new intraday high as well. 584.60, 584.88, the new intraday high. How do you be short or negative all-time highs? I've been saying that all week for a reason. It's hard to not be long this market. Diamonds, a massive move up 1.31. Now, things are starting to get kind of ripe when you look at things like the high jump. But, is that where I want to be? No, let's go back here and look at it. But 65, 67, 80, no, we're not extended. We'll look at some other things shortly, and you could see, and I've tightened it up quite a bit here, so I don't want to make it that big. Let me go back to year to date. You could see, what was I going to show you? That the seasonality, we're starting to get closer to the end of the negative seasonality in the market. Still have a little bit more to go on the downside. The Russell, still below all-time highs, but up nicely 1.85% today. And like the others, we got one more month of flat, and then we start to the races. Still think we finish the market higher from here, but I am not one who believes we don't go down some. I think we do go down some before we get the final rally into the year end. But I'm prepared for us not to. I'm uber long right now. If we look at the volatility, it was down another 1.19. A little bit more to go before it gets to the area that you expect reversals. And the dollar traded down below the 50, down 0.33. And I think that has a lot to do with the Europeans holding and us going to cut. Commodities. Still wonder if that was a legitimate bar, but you could see an open candle, which means we closed higher than we opened. down 0.15 on the day. It's red, so we were down. So gold opened up lower and worked its way back to almost break even. On the other hand, silver leading up 1.02% at multi-year decade highs. Oil dropped back below the 200. Natural gas block dropped as well. And then continue to see a fall in the 10-year and the 30-year, down 0.47 and 0.50 respectively. Low rates, weak dollar, um, Fed easing coming. When the wind's at your back, Ian Woodward used to say you got to attack the market. And that's why being long right now has been the place to be. Massive breadth thrust. You could see in the gray bars all the way to the left of these four indexes, NYSE, NASDAQ, Russell, and S&P, we had 8 to 10% of stocks were below the Bollinger Bands yesterday. They have evaporated, and all of a sudden we've got 9% above the NYSE, 10% on the NASDAQ, 8% on the Russell, and 9% on the S&P 1500. In itself, in no ways is that a signal, but it does show the firming of the market and the massive increase in breadth. Get to 25% on any of those buckets, and we'll start talking about overbought. If I look at market breadth, you can see the NYSE. What a massive move to all-time highs today. Wow. You look at the NASDAQ, also all-time highs. But boy, look at that move on the NYSE. This market has broadened out. These are two broad indexes at all-time highs. If we look here at stocks above the 20, 50, and 200, we still could go up a little higher, but we're starting to get extended. If we look over here, you'll see similar numbers, maybe a little bit less because we have some in the 50s, not all in the 60s. If we look at new high, new lows, biggest numbers in a while, notice how green this has been, this run up. Markets are built on new highs, bull markets, not on new lows. AD line bounces around a lot, but it was quite positive on both the NYSE and the NASDAQ today, as was up-down volume. And then a sign of the times, a sign of the exuberance that we're seeing in the market. Not a shocker to me to see that the markets responded with bangos, exuberance to the upside. We talked about the Hindenburgs that have now, the last Hindenburg, the date was August 11th. We've now gone a month without another Hindenburg. It was on the NYSE as the classic finding. We saw the Eureka here, which I don't think I'd ever seen or hadn't seen in quite some time occurring during an active Hindenburg omen signal. And we asked the question, did new highs in a Eureka negate the signal? I got to believe the signal's negated. Now, did the signal work? The first signal occurred here. We sold off a little bit. This goes into the category of 3 out of 4 do not signal a significant decline. I think that's what we saw here. So all things considered, massively good day in the market today. The other market breadth tool I like to look at is to look at the 13-week new high, new lows. We're at 90% on the spiders, on the NASDAQ composite 84, 90% on the Russell, and 90 on the S&P 1500. I am still getting experience with breaking it out into indices. My go-to historically has been this thing right here on the T2121 on Warden TC2000, and we have another day before we hit the guaranteed reversal line. So it's something to be aware of, that we are getting overbought by this indicator. All right, so to sum it up, man, is this a strong market. You got to be long. I've been proven a little bit wrong because I was a little bit too defensive. I watched some of my put spreads disappear that I bought to protect. Now, I buy, to be bullish, a lot of broken wing butterflies. If I'm going to protect a position that I have a call that's fat with profits, I really just have to protect it down to the cost of the call. I don't have to protect it down to zero. So I'll often use a broken wing butterfly to protect me as well. And that, but being a butterfly of puts, not of calls. And broken wings are relatively cheap. 2 to 1 or 3 to 1 return on every dollar I invest. So I don't put a lot of money in the protection. And then all it takes on a week like this was to have a couple of the big movers, and one of them was Oracle, which I did. I still have. So I am long. I will remain long until my signals tell me otherwise. Once again, paying attention to my timing model has kept me long. And I feel like some of the risk is coming out of the market. Not all gone, but I feel like some of the risk has come out. The ratio charts, one days don't matter too much in these charts, but you see technology weaken while communication remains strong. Energy not doing much. Staples is weak. Discretionary is doing very well. Utilities bumped a little bit. It's probably because of data center relationship. Industrials bumped. Materials bumped. Financials bumped this week. Real estate trying to bump, but at the expense of probably a little bit of rotation out of technology. If we go to my layout, you could see, as I like to talk about, as the markets get stronger, more stocks are going to show up here. We had 3880. If we go into my top-down view, everything was up on the sectors. What a day. We could rank them by movement. Let's look at those: materials, healthcare, and real estate. Those will be the top three sectors. There's 1,181 stocks there. These are the industry groups in the top three sectors. Let's rank them by one-day performance. And let's take the top 10. Medical specialties. I'm going to skip that one. That's I'm not going to count it, but we may look at it. But it's something that has to be fixed in the data. Aluminum, 2, 3, 4, 5, 6, 7, 8. So those are the 10 plus the one that I think is not a bad tick, just got to be put into the right place. Sometimes the data vendor creates a new industry group with one thing in it and we have to fix it. I'm going to include healthcare plans too because they've had a nice rally. So now I've got 170 stocks. The next thing I'm going to do is come in here and I'm going to look for stocks $5, 500,000 above the 200. We are so deep and long in this bull market, to buy things below the 200 to me would be nonsense. They'd be laggards. And then I want the weekly bongo up, which tells me that they've been in a longer term uptrend. I'm going to hit OK and I'm left with 46. I'm going to rank them here by up dots and I'm going to go through the top 5 or 10. This is an extended stock, but what a beautiful run. This is open. You had a fake breakout here. This would have been a nice time to be looking at it here. And let's just look at some of the characteristics right there. So in fact, let me put a vertical line there just so I know where we're at. And so what I see on that day, and why I said it's an interesting day, is we broke out decisively above the 17. Volume was higher than the last 4 or 5 days. We had the pocket pivot signature of volume, so volume was good. We had a breakout of momentum, but more importantly, I'm looking down here where the relative strength versus the spider of open broke above the moving average, the OBV is above the moving average. That would have been a fine buy point. Now, most people probably didn't see that there. You had another one right here where the stock, after a little pullback, broke out again, and you had the same 3 dots, the relative strength in the OBV. At this point, when I highlight this, the high jumps at 100, and even though we got tons of bullishness down here, and it's a relatively cheap stock, Open Door Technologies, it's a little bit extended. And historically, extended stocks like to be pulled back some before they go higher, as you saw here. So I'd probably pass on that one, but I'd watch it. XGN, healthcare, have no idea what they do. Another relatively cheap stock. Nice uptrend, sort of a cup. And is it ready to form a handle and break out? Had gap volume break up momentum from a squeeze. And all you got to do is look here. Relative strength. We don't have it in this view. Never mind. Relative strength about to cross over. OBV has crossed over. Then we have Tempest, which is breaking out to all-time highs. This is a healthcare diagnostic and AI company. IQVIA is a healthcare data company. And we've been looking at that. It broke out above this line here. It failed. The breakout here, but relative strength is crossing up. OBV is fine. And look at the blue dots coming out of a squeeze. That looks really interesting there to me. HOUS, anywhere real estate, don't know. Nice uptrend. But every time it comes up, it pulls back. So you expect it to pull back before the next leg up. CRH, basic materials. I think it's I don't know if it's a URI competitor. Big gap up, sideways move. Is it ready to break out? Well, I'd probably put a line above that, and when it takes out that line, I might be interested. Why? Because right now it's in a side of kind of a Darvis box here going sideways, and until it breaks out, I'd be shorting it and buying at the bottom. I don't usually play that trade. One that I like a lot is Century Aluminum, CENX, and this too is breaking out. Now this one to me, I was looking at it and thinking, if I had to draw a trend line, I'd probably draw a trend line through here, and this was a decisive break and close above. But this one, high jump is at 67, so it's not too extended. The volume was good. A CPR volume breakout momentum, and look at the breakout of relative strength in OBV. That's why I like it so much. So typically I'll go through this list and see if I can find anything, and CENX is one. This is top down at its best. I picked the three biggest moving sectors. That generated the industry groups in those, and then the stocks, and then I look for patterns that I like to buy. Now, let me just be very clear. I have no idea what the markets are going to do tomorrow. I buy high to go higher. Some people want to buy low. And so the only problem I see with Tempest, but we should do a Century, is if I was to do a buy stop and say if you go above a nickel above the high of the day, I want to trigger a buy. Where do I put my stop? So the lowest of the last four would be down here at 21. That's like way too far. So I'm looking at the pattern, and if I put it right below the low of this day, the low was 22.43. I'm buying it at 24.84. That's still 250, still too far. This is a problem with the stock for me. I'd have to pick a place on this candle, maybe midway there, and set my stop midway. That's not my favorite way of setting a stop. Might be enough for me to pass. Tempest, did it have a better? Now, the same problem. When you get a big move like this, and the difference between 79 and 88 is 10%. It's really hard to find a good place to stop it except somewhere on that bar. Now, that's top down. On the bottoms up approach, which is also very effective in the program, just go to my impulse list and you could reproduce the same thing I did, but for the essence of time, I'm going to show you my favorite scan. We'll look at a couple more stocks. I am going to come in here, pick 2-day momentum up. Why? Because I'm bullish. I'm going to price over 5 and 500 because that's what I like to trade. I want to be above the 200. The weekly bond goes up, so I've got a longer term uptrend. These are the stocks that come to the top, and this is where I do my fishing. Go through them one at a time. RF Industries sounds like a tech play. I don't know what they do. So this thing's already had a breakout from here. Nice move up on really massive volume. I go in here to see what it is. No dividend, PE 26, and it had earnings today. And why is it up? 1,100% change. The prior quarter was 600%. The prior quarter was 166. The prior quarter on earnings was 500. It trades at a multiple 26. That's impressive to me. We're going to have 8 cents coming up versus 4. So that's a 100% move. If we look at revenue, we're seeing surprises on revenue as well. So this is up on fundamentals. Earnings were out today. That means it's somewhat de-risked. And if you were interested in what the earnings said and what they do, you just click on the link and that will pull up the transcript for your review. So that one looks interesting. CSTM is one that I was looking at. I think this might have been the day I talked about it, and I was setting my target up here and my stop down here. This was the line that would have to be closed above. Well, we got above it today, got above it here as well, but this might be one to look at. CSTM, this is a mining equipment company. It's going to have 37 cents versus 2 cents. So you're going to have massive earnings per share growth. It does not pay a dividend. It's got a PE of 10. I still like that one. There's your Century Aluminum, TIPT, too loosey-goosey. Carlisle Group. I noticed that KKR, which is a very long-term position I have, like since $8, had a big move today. This is the asset managers. It's got a 2.78% dividend. I guess they do well when rates get cut. You could see surprises the last 2 quarters. Should have had earnings are coming in November. So this one looks interesting. And why do I like it? Because it's pretty clear that's not what I wanted. Wrong one. Let's delete that. Let's try that again and hit horizontal, not vertical. Pretty clear to me that that was an area of resistance somewhere in here. And it broke out today. Not an well, it's $68 stock, pays a dividend. I like that one a lot. Let me just see something here. All right. So if I was to buy this stock, I would have to buy it above that close, so somewhere around 68.50. 62, that's 10%. 63, 8%. I'd probably put my stop below this bar here at the bottom of that bar and probably have about 8% risk. But I don't do any of these trades unless they trade up above the close and into my price. SRE has showed up a couple of times. And oh, by the way, this is my secret weapon scan, which are these two momentum dots that occur in a row in a squeeze with relative strength and OBV, flip it up. And why do I like this? Because I've watched this scan ever since Praveen built it for me. And a breakout after these two positive days really helps to define a strong stock. Rambus keeps running. Wow. I looked at it over the weekend. Too early, and now it's probably too late. ETR, I don't know if this is an MLP, but it pays a dividend like it's one. Earnings are not due to October 30th, pays a 3% dividend. And again, I like to draw lines because the next time I come back, I'll know what I was thinking. And there is one that broke out of a trend. Wedge pop. I like those. Now, let's just talk about this one here. Because if I was to buy it, I'd probably stick my buy stop. If it closed at, let's see, the high of the day was 87.47. Let's say I set mine at 87.55. No, that's not the close. Wrong day. Close, the high was 89.94. So $90.05. Let's see why I set it there. Okay. All right. Let's say that for my stop, I'm going to pick the lowest of the last 4 bars. I'm going to put it right under here. That close, or the low on that day was 86.49. I'm going to put that at 86.45. The difference between 86.45 and 90 is $3.64. That is a 4% risk. That is right in the sweet spot for me. As long as it stays above that line, and oh, by the way, it's been above that line every day since July 20th. As long as it stays above that line, I'm into a stock that pays a nice dividend, that's breaking out from a wedge. I have a risk of 4%, which is perfect. I like this one a lot, ETR. PRIM, I think this is a water services company. We can go over here. Renewables, okay, more than just water. Solar demand and project wins. So you could read through and see what they do. Strong utility demand, data centers, there's the magic word. And again, on any of these you click on, you can get the report. If you go in here, you could see next earnings are November 3rd. I love earnings surprises, and so does Wall Street, guys. Um, Looks beautiful. PE's 22. I like to see earnings per share growth more than the multiple, and I've even got surprises off and on revenue. I like Prim a lot as well. EMR, Emerson, got to fill this gap. OC, Owings Cornings, a breakout above the 200, just not my favorite name. HLI, Houlihan Lokey. Here's another one that had a significant breakout from a range. And I think this one looks extremely interesting too. LHX, a defense play. Again, I like breakout from the sideways range, and it kind of closed above my line today. My line might be a little high. So this is another one. So I'm not working all of them up because there's hundreds of stocks that look good. The point is I'm identifying stocks based upon characteristics, whether I'm looking at a top-down approach, I'm looking at my favorite scan, then I'm looking at chart patterns, and then I'm setting up my trade based upon what's on the chart. And then the last one being Cummings. Another one. I mean, just so many beautiful breakouts. I think this market goes higher. I just would have expected somewhat of a pullback in September, but another fresh breakout. Beautiful stocks. This is bottoms up, running my scan. Top down was building it off the sectors and industry groups, and I'm going to bed. Have a great day in the market Friday. My weekend reviews, I'll try and get something out Friday night. I'm on the road again, which is going to be the theme for the next month. I think I go to Vegas next week for a VectorVest meeting. And then at the end of the month, I'm going to San Francisco for might be 2 weeks for VectorVest, I'm not sure. But then I go to San Francisco for the IBD, formerly known as the IBD, San Francisco Annual Meetup Meeting. Take care, everybody. Let me know if you want to come to my meeting. I still have a few spots left.